Good morning, traders. It's 8:01 a.m. Chicago time on Friday, the 26th of August, 2016. Happy Friday. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Looking at the overnight news, the most recent being the release of the Q2 preliminary GDP price index came in at 2.3, a little bit better than 2.2 expected. Core PCE Q on Q came in at 1.8 versus 1.7. July advanced goods trade balance in the U.S. came in at negative 59.3, slightly better than negative 63 billion. Also, we got prelim GDP annualized Q on Q came in at 1.1 in line, and personal consumption came in stronger at 4.4 versus 4.2. In the UK, GDP came in line as well at 0.6, year on year 2.2. And then also we got the German September GfK consumer confidence at 10.2 versus 10.0. This matches the highest level since October of 2001. Fairly positive for Germany there. As far as the overarching news overnight, the key element today, of course, is the 9 a.m. Central, 10 a.m. Eastern remarks by Janet Yellen, the Fed chairman. Everyone's waiting for the speech about Fed policy to try to lay out a path for Fed policy. The odds of the latest research shows that the odds of a Fed rate hike are on the way up. Bloomberg shows traders are pricing in a 32% chance the Fed will raise interest rates at its September meeting and 57.4% probability that a hike will happen before the end of the year. And that's it for background news. The last thing is Saudi Arabia flipped its position on potential oil freeze. The Saudi energy minister told Reuters that he didn't believe any significant intervention in the markets necessary other than to allow the forces of supply and demand to do the work for us. Crude saw a downtick on that, but it's interesting because we keep getting conflicting news on whether or not they're going to meet and decide on an output freeze or reduction. Anyway, that's what's driving the overnight. As far as what's left for today, again, Janet Yellen at 9 Central, but we also have University of Michigan Conference final August, expecting 90.8. That's also at 9 Central, the same time as Yellen's remarks. And then, of course, at noon Central, 1 o'clock Eastern, Baker Hughes rig count. And that's all I see for today. The Bund Babel-Schatz September 2016 options expire at 10:15 Central, 11:15 this morning, if you hold any. Let's have a look at our charts here. First step, reviewing yesterday's Trader Bite. Yesterday's primary idea, if you recall, the market was trading right up against the overnight low at 69.50 versus 69 during the Trader Bite, and the comment on that was that we are likely to push lower and then look for a pop up into yesterday's range. Once it tests below the overnight low, the primary expectation for yesterday was that the market will hold inside of the prior day's ranges you see on this chart here. And so that's the primary idea. The secondary idea was a choppy open, an attempt higher, and then a push down once we test the 72.50, 73 area, looking for a push down through the gap zone range at 66.75 down to 63.50, or 66.50 down to 63.50, and then finally a push to the MC point of control at 60.75. And like I said yesterday, that's the lesser likely trade, but the more the better trade for day traders. Here's what actually happened. So here you have it, an immediate test of the overnight low, right there. It opened in an open auction, tested the overnight low. You could have extended the opening swing from there to there. My charts weren't working properly, so I don't have my opening swing set uh, uh, from yesterday. But overall, the market tested below, just like we showed um, in the primary hypothesis, right there. Test below, right there, and then turn around and push up. And that's what we got. And we ended up pushing all the way up to 77 and a quarter. And the expectation is we would push to 79 and a half. So it didn't quite get to it. It missed it by seven ticks. And then we ended up basically with a neutral day yesterday, pushed through the IB high, and then we have a one tick failed auction on the IB low yesterday afternoon. A pretty quick test and a reversal is a one tick failed auction. And then yet again, we've got a day that has a multi-distribution profile. I talked about this at length yesterday, except yesterday's was kind of balanced. It's very interesting how the value area ended up working out so that both distributions got into the value area because of the way the point of control is and how much traded. But overall, another fairly odd shape for the day. So that's yesterday in review. Let's take a look at what we've done since. The overnight session, complete silence, complete quiet, 145,000 contracts traded, not even close to the what is common for the overnight session, which is about 210,000 currently. Completely sideways, a very incredibly balanced profile with very high kurtosis, telling us that there's either disinterest, which is what the volume is saying. There's disinterest here. When you have very high kurtosis, if you have the volume with a kurtosis, what you have is a lot of compression, and that's likely to break into a quick move, a trend type move. If it does break, we can't tell which way, but it tells us that this little rocket's primed and ready to go. But this situation here is that the volume is very low, and what this shows is disinterest by the market in picking a direction or staking risk assets in a particular way overall by the aggregate of all participants in it. So the range overnight is very poor. We have about 4.5 points for the overnight. It's likely to be a very quiet open until the comments from Fed's Yellen. So I'm expecting a fairly quiet open. The movement is likely to be governed by intermediate OTF if there is any movement, and it's likely to come in the form of using the futures to hedge stock or equity portfolio positions. But other than that, I'm looking for mainly just short-term traders just beating each other over the head once the market opens. So that's where we are. Looking at the broader market, I did a quick sweep of what's going on elsewhere. And if you recall, I talked about the treasuries a bit last week and the week before. And what the treasuries have done has been very interesting. Treasuries had some really interesting moves here. Pushed up. We had a gap down, pull back, and then we have a gap up. And then a gap down, and then push through, then a push back, then a gap up, pull back, push, and then we had a trend down day, a strong move down on a trend down day. Then the next day we gapped up right here, and then we came back, and then we dropped, and now we're pushing up. essentially what the gist of this story is, that there is really no direction for the treasuries, and they're completely imbalanced, and they're trading against the MC point of control. And what this is saying, potentially saying, is that the treasury market's in a holding pattern, waiting for what's next. There's really nothing. What this market is saying is, and remember, the 10 years, very, very, very popular product, fundamental product. What this is saying is there's nothing new to price in, and it's in a holding pattern, and that we continue to be that right now. So we've had a fair amount of movement in equities over the last 2 days. But other than that, we've been grinding around, and the treasuries are doing just that. So yesterday, with the test down, pullback, and an extension, I believe there's a decent potential. The way I'm reading this is a push. We had the push down on that biotech, that pharma news on Wednesday, and then we had the pullback yesterday. We had the extension. This is the extension. We saw buyers come in ahead of the MCLVN, the MCHVN below, and then pop back up. The expectation this morning is choppy open, very fairly decent swings probably on the open. I expect the market on open orders to be fairly dominant, and then but really directionless. But the expectation is I'm looking for an attempt lower this morning, and then I'm looking for it to recover back to 79.50. Oops, I missed the 79.50. So the expectation is it'll look like this: pull back down, push to 79.50, pull back into the range again, and then potentially push up to the naked point of control at 2181.50 on the right after the Janet Yellen comments. That's my primary hypothesis for the day. The alternative is chop, and then the comments from Janet Yellen come out. The markets attempt higher. I expect them to stay in range on the upside. If they stay in range and fall back through the open, then I'm looking for a drop, retest of yesterday's low, pull back, and then again the continuation trade that we talked about yesterday, and the eventual test, wishful thinking, but the eventual test of the MC point of control, which I think is out of range given recent ranges. That pretty much sets you up for the day. Just a quick reminder to everybody that it is Friday, and you'll want to stay guarded. I would save your bullets until 9 o'clock Central, 10 Eastern, until the Fed Yellen comments come out, and then start pushing forward. Remember that you need to come in with some key trade ideas. That's what these hypotheses are. You've got to come in with some key trade ideas to give yourself an edge over other traders and all of your other competitors. If you're not doing that, and you're just coming in for the purpose of grabbing what I'm sharing here, then you're doing yourself a disservice. You need to come in to the day with some key trade ideas for whatever product you intend to trade. Hopefully you're focused on one product, mastering one product until you're consistent. Then you can start dabbling in other areas. And then most of all, make sure you're setting and reviewing your goals. This is a given that you should be creating goals on the weekend, coming in and attacking those goals throughout the week. Hopefully you'll take this weekend to review your performance this week, and then to set goals for next week so that your practice in trading is deliberate. Good luck, and I'll catch you on Monday. Have a great weekend.